Welcome to the Wealth Wisdom, where money has history and knowledge becomes power.
Imagine a world where banks can create money out of nothing, not by printing paper, not by minting coins, but simply conjuring wealth from thin air. A world where governments borrow endlessly, citizens pay the price, and the rich grow richer, without ever producing anything tangible. Ask yourself, how did we allow this system to take hold? Who decided that a mere promise, an IOU, could become the engine of global wealth? And why does this cycle repeat itself, generation after generation, leaving ordinary people to foot the bill? Today, we're going to trace the story of how banks learned to manufacture wealth out of thin air, and how that secret continues to shape your money, your life, and your future, whether you realize it or not. The ancient roots of banking. To understand this, we need to travel back thousands of years, to a time before central banks, before paper money, before interest rates, before anything resembling modern finance. Back then, wealth was tangible. Gold, silver, livestock, land. A king's power was measured in soldiers, lands, and treasures in his vaults. A merchant's success depended on the goods he could trade, the ships he could protect, and the coins he could carry. But there was a problem. Transporting gold was risky, heavy, and inconvenient. Merchants needed a solution, and they found it with early bankers, goldsmiths, and money changers. These goldsmiths offered a simple service. They would store your gold in a secure vault and give you a receipt. This receipt could be traded, used to pay others, or even stored as wealth. For a time, this system worked perfectly. The receipts represented real value. Your gold was safe and you could redeem it at any time. But then, something extraordinary happened. Most people never actually came to retrieve their gold. They simply traded the receipts instead. This seemingly small observation would change the world forever. The birth of money from debt goldsmiths realized, if people trusted the receipts more than the gold itself, they could issue more receipts than the gold actually held in the vault. They could lend them. They could charge interest. This was the birth of fractional reserve banking. Suddenly, banks could create money simply by issuing promises, claims on value that didn't yet exist. Every loan, mortgage, bond, or credit card transaction is an echo of this idea. Money can exist before it is earned, produced, or deposited. Banks had discovered a secret. Wealth can be manufactured without producing anything real. And those who understood this first, the early banking families in Europe, gained power that kings could only dream of. The rise of banking dynasties. By the 17th and 18th centuries, banking families like the Rothschilds, the Medici, and later the Morgans had mastered this system. They didn't fight wars with swords. They fought with capital. They didn't seize lands. They seized influence over nations through debt. Wars require money. Governments borrow money. Borrowed money earns interest. These families discovered a revolutionary truth. Who controls the flow of money controls nations. By funding multiple sides of conflicts, lending to kings and empires alike, and structuring interest in their favor, these financiers didn't just profit, they shaped history itself. Debt became not just a tool of finance, but a tool of power. The creation of central banks. As banking expanded, governments realized they could not allow private banks to control money unchecked. So central banks were born, institutions meant to stabilize economies, regulate lending, and provide national currencies. But central banks were designed in a very specific way. They lend money to governments at interest. Governments borrow instead of printing money. Banks create that money out of nothing. Through a process called fractional reserve lending, one deposited dollar can generate $10, $50, or even $100 in loans. Money was no longer a measure of value. It became a tool to extract interest and generate profit for financial institutions. The system was no longer about storing wealth. It was about manufacturing it and profiting from the debt it created. The global shift, detaching money from gold. For centuries, this system was restrained by gold. Money had limits because it was tied to something real. But in 1971, everything changed. U.S. President Richard Nixon removed the dollar from the gold standard. Suddenly, money no longer represented gold. Money became fiat. It existed simply because governments said it did. The implications were massive. Governments could borrow endlessly. Banks could create limitless money through loans. Inflation became a permanent, predictable feature of the economy. Wages didn't keep pace. Housing costs exploded. Education became unaffordable. Savings slowly eroded. The invisible theft of purchasing power had begun. How debt became a permanent profit machine. Once money is debt and debt earns interest, the system perpetuates itself. Governments borrow money to fund spending. Citizens pay taxes to service that debt. Central banks and private banks earn interest. To pay the interest, governments borrow more money. This creates a never-ending cycle. Debt fuels money, money fuels interest, interest fuels more debt. No army is required, no invasion, no revolution. Wealth flows upward quietly, invisibly, through the invisible hand of debt. The consequences are everywhere. Look at the numbers today. The United States owes over $35 trillion, Japan owes over $12 trillion, Europe collectively owes tens of trillions. Developing nations like Pakistan, Egypt, Nigeria, and Argentina are trapped in endless cycles of borrowing. And here's the shocking truth. None of this debt is meant to be repaid. If it were, the money supply would collapse. The economy itself depends on continuous debt creation. This is not a flaw. This is the design. Attempts to fix the system governments try to address the problem with austerity measures, budget cuts, tax increases, debt ceilings, monetary tightening. But none of these address the core issue. Money itself is debt. As long as money is created through lending, debt must grow. Interest must be collected. The wealthy profit endlessly. The rest of the population bears the cost. The system is designed to reproduce itself indefinitely. A pattern repeated across the globe. The same cycle occurs repeatedly. Argentina, debt crisis, austerity, privatization, bank profits. Greece, bailout, tax hikes, pension cuts, foreign bank control. Turkey, inflation, borrowing, currency collapse. Pakistan, debt dependency, structural reforms, rising poverty. This is not mismanagement. This is a formula. A repeating blueprint for extracting wealth from nations and concentrating it at the top. 3 key takeaways. Money is manufactured from debt. Wealth can exist without production, as long as someone is willing to borrow and pay interest. Central banks and financial institutions profit endlessly. The more a country borrows, the more the banking system earns. The system continues because most people don't see it. Complexity and trust disguise a mechanism of wealth extraction. A warning for the future. Debt is rising faster than production. Inflation outpaces wages. Housing and essential costs grow unchecked. At some point, every system based on infinite debt faces a breaking point. When it happens, the world will split into 2 groups: those who understand the system and adapt, those who remain unaware and pay the price. The question is, which group will you be in? Call to action. If this opened your eyes, share this video. Comment your thoughts. Subscribe to stay informed. Knowledge is the first step toward understanding the system. The power of banks comes not just from money, but from our silence and ignorance. Now that you see the design, the question becomes, what will you do with this knowledge?